So I often get asked the question, does the volatility index or VIX even matter anymore in the markets? Is this an important thing for us to be looking at, trading, or potentially seeing signs of crashes or bull markets with? The answer we'll talk about in this video, along with our technical analysis levels for the S&P 500, NASDAQ, gold, Tesla, Bitcoin, and more. There's still a decent amount going on in some markets right now, guys. Stay tuned. Okay, well, as we like to do on this channel, let's begin our market analysis for the close 12th of August 2021 by having a look at the heat map of the S&P 500 here. And you'll notice actually a few FANG stocks came back. Apple 2%, Microsoft 1%, Google, Amazon, Tesla, specifically Tesla, and a few others did go okay, with the banks being lackluster and a few other sectors not doing so well. Why was this? Well, we hit the all-important 20 moving average yesterday on the NASDAQ, and it had a little bit of buy the dip. Is it enough? We'll keep going through that very, very soon. Let's take a look at the actual markets overall. Which one was best? It was the NASDAQ, 0.41%. Some people will be yawning out there. It's so slow at the moment with the markets, but that means we're coiling and getting up for a big move, yeah? S&P 500, 0.3%, Dow Jones, 0.04%, and the IWM Russell, 0.24%. Nothing much going on across the board. Which sector was best? It was a flip of the previous couple of days. We had IBB, the genomic space, and biotechnology doing well, and we had healthcare out in the lead here with a 0.79%, and down the bottom we had the semiconductors showing a negative 1% on the day. So let's get stuck into the technical analysis straight away here, and I want to just quickly start talking about the volatility index. Guys, I think this is something that is maybe often, let's call it, misinterpreted. The volatility index, I don't believe, is incredibly easy to technically set up. You see, of course, huge spikes. You see massive kind of gains, and some people like to trade the exchange-traded funds that, of course, follow the VIX. It's not without its own problems. Of course, whenever you see an exchange-traded fund of the VIX, it'll generally look like this on a chart when you go out over a weekly, and that's because it's incredibly expensive to hold these contracts on the roll and stuff. So firstly, the VIX is the volatility index. This basically shows us the level of expectation over the next 30 days for the market to show an increased amount of volatility or, of course, a decrease. Now, generally speaking, it's called the fear index. If it goes up, then usually the market is declining. If it goes down, the market is feeling more bullish and, you know, green days ensuing, yeah? So what I wanted to discuss was, of course, we had that massive movement up, and this massive movement occurred during the pandemic. It went to, you know, ridiculous highs. We got as high as 85. The fear was real in this market. It then takes a long time for it to come back down to a more stabilized level, and we've discussed several times that underneath 20 generally means a normalized market. Okay, so we are underneath 20 at this point, and anything above 20 means an incredibly volatile, fearful market. We're sitting at 15.58 now. So when we go back over history, can we learn anything about the global financial crisis and when we need to be concerned in the markets and when we need to be, you know, just kind of like a bit more, I guess, you know, chill in the markets? Well, the first thing I want to state is that we're still only 1 year plus, you know, let's call it 16, 18 months away from where we started all of this volatility. Now, you'll notice that when that happened during the global financial crisis, it came down to a very key level around these 15s. And the VIX actually, for many years after that point, stayed around these 15 zones. So it stayed right around the 15 level. Why is this important? Well, because after that happened, and a few years later, the norm for the VIX actually became sitting around 12, where there was very low volatility in the market. Yes, there were spikes. Yes, there was still trade. But overall, this is a very bullish case scenario for the volatility index. So where are we right now? Well, we're sitting right around that 15. And every time the 15 was hit, or around this 15, 14 was hit, we entered a period that was very likely to have those increased spikes somewhere in the next month or 2 month period. And you can see it here very clearly on the weekly. Now, if we scroll all the way back over to where we are now, and you consider that we've been in this 15 period a few times, notice every time it's come down around this level, A few weeks later, we've seen an increased spike in volatility, which of course has led to some weakness in the market. Now, it's not a sure thing. Of course, we could go all the way down in the volatility index, all the way back to 12 faster than normal. And this has been certainly a very different pandemic, or a very different scenario from the global financial crisis in some ways. But I tend to think when you've got seasonals coming up, which we know do happen, such as, of course, the September period being the weakest month of the year, also the NASDAQ being the weakest over the August-September period, that this VIX indicator can be seen potentially as contrarian. What that means is that really you need to be on higher alert when it's down here in the 15s than you needed to be when it's coming down slower after that pandemic period. This is where you can expect higher volatility just to come through. And I think that's an interesting idea, and hopefully you guys get some thought processes out of that. Of course, you can apply that to several different markets. Think about whether it's time to put in some hedges. Maybe you've got different scenarios. Maybe you're scaling out. It's just that type of year. Even though we've still got price action showing all-time highs, it's melting up incredibly slowly right now. We're seeing 0.3% moves, 0.2% moves on the S&P 500, non-explosive movements at this stage. So it's like that calm before the storm. Whether the storm's big and bullish or whether the storm's bearish and nasty, we're yet to see, but it is stuck in an area. We'll be taking a look at that in a minute. Let's move over here to the dollar index. More of nothingness really from the dollar index after that initial non-farms and core logic figures that we saw here, the core CPI figures that came out. We have an engulfing candle that came through. It then bounced off the 92.80, found a little bit of buying pressure. And as you'll notice on that smaller time frame, if we go back to the 2-hour chart, it could be setting up here for a peak, a trough, a lower peak. And if we get through 92.80 now, I would expect dollar index to actually dive pretty substantially, probably down to around that 92.40, 92.30, and for that to be bullish for gold. So it might be worth watching here. If we get underneath 92.80, you might want to flick over to gold and other currency pairs, as I think a lot of those will be showing good signals. Of course, bullish case scenario still 93.20 plus closure. That's the thing we're looking for. Let's move over to the US 10-year and have a look at that. Well, double bottom still in play. It is struggling around this 50 exponential moving average. Once it closes, and if it does close above this zone, we expect it to move towards our downward trend line, and you'll notice why that's so important. The downward trend line has been found several times and always respected. That is the aim for a setup like this. And if it is to hold up, it needs to close probably above over maybe the Friday session or Monday session. You know, it needs to start finding this strength. It's already done the retest twice of the 1.30. I wouldn't be a huge fan of picking it back up off that 1.3 level at this stage, just because it's come down twice already. It should be showing that extra strength. Let's move over to the TLT. This is the 20-year bond. Remember, all these markets are connected. No new information coming in yesterday. We had the long leg doji, the high and the low. We didn't have a close below and we didn't have a close above. We just had a little bit of a wick low and then a bullish movement. 50 exponential has been found. We know that the TLT loves the 50 exponential. You can see the dynamic resistance over here and how much resistance it had. That means that this is a very good support zone. We're looking for bullish movement above the 147. Again, just no information, guys. It's just not coming out. But this is sometimes you have to be like you literally have to be the crouching tiger here. You have to wait. You have to be patient. And then you will get your prey, which will be whatever stock or whatever thing that you're looking at in the markets. And it's just not occurring currently just yet. Here we see gold, and we've got the previous support. That's going to become an interesting resistance level. We've got a long leg doji formed over the last day of closure. You can see here, closure above actually could put pressure back on. I think it would probably continue through this point of support becomes resistance. Closure below, we could move all the way back down to 1678. An interesting zone here for gold, but as I said, after such a massive crash or big crash that happens, you need to wait for it to create more structure, and it's doing so right now. Other interesting things though, what about this? Ooh, Tesla actually looking interesting for the first time in a while. We're still trapped between the 700 and the 727 zone. We go down to something like a 4-hour. Let's have a look at it. So this close was pretty nice. This actually showed us a fair bit of bullish intention. You can see that it's above all the previous wick highs. We've got a closure at a point higher than any other closure. that is for many people the beginning of a scale-in style order on something like Tesla. Now, Tesla's been doing a lot of fakey outs. We know that, of course, many people will have stops underneath here. So, of course, if it ever did fake out, close underneath this level, we expect further shorting for at least the distance of this move. And we're looking for a 727 plus closure to instigate towards that 770, 780 area. Tesla is sleeping. If you actually look at most equity, kind of hype equity style charts, what you'll notice is that Tesla is not showing up that heavily. So let's refresh this now. Maybe yesterday it started coming back through. Yeah, see, Tesla is now showing a 4. So the retail crowd is just getting involved back with the social volume here. It's not a huge social volume score. As that upticks, as it goes through 727, people start to pile in, and we've already seen how powerful that pile-in effect has been. Moderna, AMD, etc. When it goes, they go. So Tesla through 727, I hope it happens for you guys. That would be awesome. Let's move over to IWM, still stuck in the middle of the range. We won't focus on this too much, but we do look at it daily. It's still trippity trapped between a whole bunch of wicks each way. It clearly has no idea what it wants to do. Need 10-year to really show us what's going to happen next. Remember, IWM, tons of financials in it. And then we'll move over to QQQ. So QQQ during the live stream last night came down to the 20. I guess, unfortunately, in some ways, I think it didn't close underneath the 20 exponential moving average. Now, you might say, why would you want the market to go down, Tom? Well, the main reason is because if it does, I find it a little bit more of a healthy market. 2 steps forward, 1 step back. It's really slowly melting up through these cases. And if we do get a closure above the 369.50 here, we move into our trend line, which has been taken off the last couple of highs. You can see here, last peak, peak, peak. And then we've got a bigger one that goes across all of these peaks. So if you draw that one up, you'll notice here, and you can actually draw this as well. So you've got this really good level that's been compacting the market at this stage on the NASDAQ. So even if it does make a new high, try to look at it from a trade perspective more than anything else, because I don't think this is the best time ever for investment in the QQQ. There's really a lot of signs that are showing negativeness. However, the price action still continues to pile up. SPX, the S&P 500, well, this one has been doing much better. Financials, materials, industrials, all going okay over the last couple of days, and that started powering up. We've got 2 lines here. We've got the old community trend line, and we've got this new trend line that goes through the last peaks. Expectation there would be about 4,510 if it went up in a vertical line here, and of course the old trend line would be about 4,600. So this is well and truly on its way. You take the distance here, and that would be your expectation. And we said that yesterday. It's the tale of 2 markets at the moment. It's the NASDAQ versus the rest of the market. And at this stage, it usually is a seasonally weak time for the NASDAQ and a strongish time or okay time for the S&P 500 during August. You can see the expectation would go into around this trend line at this stage. We'll move over to the US 30, another one that's still looking strong, very similar to the S&P 500. Nothing much else to see there. And then when we have a look at the BTC and the Ethereums at this stage, we thought weakness would come through yesterday. It did happen. You got underneath this shooting star candle. That's sold off a little bit. It's then started to bounce up. And I think we kind of like look to bounce here and then have a look at this on the 2 hour. So we'll go down to the 2 hour chart. We're right at the tippity top here. We're at the previous resistance, previous support, previous support, previous support, 20-50 moving average. For scalpers and day traders, they're looking for little lightning bolts, little movements down here where resistance is found on Bitcoin and it turns over, makes a new trough, and of course moves down to the 42.5. I'm looking for that 42.5 ideally here for Bitcoin. I think that's a good point where a lot of whales will try to rally back into it. And it does make some sense after such a large move, after such an anticipatory, kind of everything going across the board, Ethereum, ADA, Cardano, everything's just been going on fire. So I'm looking for it to roll over a little bit here. If it doesn't, that's fine as well. But yeah, just at this point, it's right where it should start to happen. You're looking for a little kind of lightning bolt towards the downside or another smaller time frame signal. Remember, it's putting the signals together that make you a better trader. We move over to Ethereum. This actually doesn't look as negative. You'll notice you've got a buy kind of wick, a buy wick, and it is again at a previous level of support becoming resistance. If Bitcoin goes, so will Ethereum, you would think. But at this stage, that chart actually, I would not be able to short that chart easily. I would definitely need a lot more confirmation on the smaller timeframes to be able to do that. Good luck, everyone. I hope everyone has a great Friday session. We'll obviously be live streaming 1 hour before the New York Open. And yeah, it's been an interesting week. We've had a couple of down days on the NASDAQ. We've had a little melt up here on the S&P 500. And it's really been more about the specific stocks that you're picking. And I think there has been some really nice breakouts. You can go have a look at things like CAT. John Deere broke out recently and started running. That industrial bill really helped a lot of those types of stocks. Bye for now, guys. Catch you in the next video.